Hello friends, so now let us start the second topic, which is the foundation for GST, which is Levy of GST. Now when you are going to talk about Levy of GST, mind you, the content there in the ICA material and the way that we are going to discuss is a bit different. We have divided Levy of GST there in your ICA module into number of chapters for ease of understanding and for conceptual clarity. So second chapter we are going to discuss Levy of GST. Again, as we'll always do, we'll be dividing chapters into subparts. So the first subpart here would be the bird's eye view. Now, mind you, my friends, this is a common point which is said by the students. So, should we write the section number? Should we write the rule number, notification number, etc., etc., etc. while presenting the answer? The straightforward answer to this question is yes. You are required to write the section number, rule number, notification number. Yes. At times marks are deducted for not mentioning them, and it does influences the evaluator while he's evaluating your paper to make him understand the depth of knowledge that you know. And my friends, if at all I meet you very regularly, how you are going to feel that I'm going to call you by only signs and other names but without mentioning your name? It won't be good, my friends, correct? So like the same way, you have to mention that section number or rule number or notification number whenever you're trying to address that section or rule or notification, as the case may be. Now my friends, you'll tell that no sir, it's quite difficult to remember so many sections, so many rule numbers, notification numbers, and that too we have many subjects at the same time to learn. That's a simple way to understand it. See, whenever we are starting the topic, we'll be discussing something called as bird's eye view. Now what will happen with this bird's eye view? You'll have much clarity that what are we going to discuss in this topic. I mean, we'll be fulfilling 2 points. First, we will be knowing that what is the scope of this chapter. What are we going to discuss in this entire chapter? So that will be the first objective of the bird's eye view. And there will be one more objective of this bird's eye view, whereby we'll be clearly knowing what are the sections and the rules and the notifications that we are going to discuss in this particular topic. Right, so you will be having clarity with all the sections and the rules and the notification that are going to come in this particular topic. So bird's eye view will be there at the beginning of each chapter. It serves 2 purposes. Point number 1, it will ensure that you are very much aware what are we going to discuss in this topic. So you have that boundary within which you are going to discuss. It doesn't mean that we are not going to interlink the provisions. Obviously, when you are talking about tax law, that to indirect taxes, even when you talk about direct taxes, tax laws are the laws where you have to interlink the provisions. So we are going to do interlinking of provisions as well, but we'll know the outer boundary, what is the main content that we are going to discuss. That is the first thing that will be served by bird's eye view. Second thing, you'll know all the section numbers, rule numbers, notification numbers, etc. within the discussion of this particular topic. So it is going to serve 2 purposes. Now you have to understand one more thing. What is there for your exams? You do have to remember the provisions of CGST Act 2017, and you have to remember the provisions of IGST Act 2017. Right, now most of the discussion in all the chapters, right, we will be focusing only on the provisions of CGST Act. And the corresponding provisions of IGST Act would always be mentioned in the bird's eye view column, where we will be writing the corresponding provisions of IGST Act. Unless otherwise required, our focus will be only on the provisions of CGST Act. So whenever I am going to address any section or any rule, right, we are going to discuss about CGST Act 2017 for the section and CGST rules 2017 for the rules. Unless otherwise I specifically tell them no, now this section is of IGST Act. So the focus should not be there on that. Now you'll tell that no, what about SGST Act? Friends, you have to understand that SGST Act is different for each of the states. Respective state will pass their respective state GST Act. That being the case, SGST Act is not applicable for your exams. Now what about GST compensations to States Act? Even GST compensation to States Act, though a very small act, it is not applicable for your exams. Now we'll tell what about Union Territory GST Act? Again, Union Territory GST Act is not there for your exam. So how you have to remember is, you have only two things for you to remember. One, you have to understand the provisions of CGST Act, and side by side you have to understand the few provisions of IGST Act itself. Right, so when you are going to discuss IGST, it will be a separate topic by itself. So CGST Act is a focus. Whatever section number, rule number, notification numbers we are going to discuss, it will be that of CGST Act 2017 for the sections, and CGST Rules 2017 for the rule numbers, right? Unless otherwise we specifically discuss, now this is not a section of CGST Act, it is a section of IGST Act. That is going to be the understanding, right? So it will ensure that you know the section numbers. Bird's eye view will serve two purposes. One, you will know the outline. Two, you will know the section numbers, rule numbers discussed in that particular chapter. So how are we going to practice that? In the beginning, we'll see all the section numbers, rule numbers which are relevant. Alright, notifications we'll see only within the topic. So section number, rule numbers, whatever are there, we'll be seeing in the bird's eye view itself. Now, when we are going to focus on the concept, we will not try to specifically focus on the section number. We'll be discussing section number, rule numbers again and again, but the focus there should be only on the concept, not on the section number, rule number once we are inside the topic. Though we are going to discuss about that also every time when we discuss the provision. Now, charging section of CGST Act is section 9. So when you talk about the charging section, that happens to be section 9. That is the charging section. Now what is charging section? Friends, you have to understand that charging section is the base section of any tax law. So whenever you have a tax law, for levying that tax, you require a charging section. And without the charging section, tax levy itself is not possible. Forget about collection. So we'll be discussing the difference between levy and collection also. And friends, remember that this particular chapter we are going to discuss only and only about levy. Levy means this tax is per se there. Whether it is now going to be collected or not, that is a separate matter. We are only going to discuss about levy, which is otherwise called as charging provision. Right. So charging section of CGST Act is section 9. And when you talk about other sections that we are going to discuss is section 1, which will talk about applicability of GST, that GST Act is applicable throughout India, including the state of Jammu and Kashmir, etc., etc. First, we will see the applicability, whether it is applicable even to Jammu and Kashmir. The answer for that is obviously yes. We have discussed already that Jammu and Kashmir, though it was a late comer, but Jammu and Kashmir did accepted GST provisions with effect from 8th of July 2017. Then we are going to discuss about supply section 7. One of the most important provision, rather we can call it as the most important provision of GST. Section 7, understanding what is supply. What is supply? And once you understand what is supply, then only we can move ahead. We are going to deal with this topic, levy of GST, in very slow pace for one simple reason. This is the foundation for your GST. And once you are clear with this topic, you will find that other things are very simple. So this topic you should pay due attention, my friends. And again I'll be telling that come back from your thought process. But because I understand that when you're watching the lectures, even when you're inside the class, rather for that purposes, the mind deviates. So you have to come back, and again I'll be giving you due reminders for you to come back whenever I feel that no, the discussion has gone too lengthier, and my friends, you have mentally not there in the lecture. So I'll be recalling you, please come back and listen to the lecture. Now coming back here, section 7 deals with supply, and section 7 has got 3 schedules. Rather, CGST Act 2017 itself has got 3 schedules, and all the 3 schedules are dealing with supply. So section 7 is to be read along with 3 schedules. Schedule 1, which is supply without consideration. Schedule 2, which defines whether it is supply of goods or supply of services. Schedule 3, which tells the cases where it is neither supply of goods nor supply of services. So whenever you are going to discuss about section 7 supply, it is always read along with 3 schedules. Schedule 1, which is supply without consideration, otherwise called as your deemed supply. Schedule 2, which actually defines the nature of supply, whether that supply is supply of goods or whether that supply is supply of services. And Schedule 3, which tells that there are certain cases which are not at all supply, neither supply of goods nor supply of services. Right, that is one of the most important provision that we are going to discuss in this entire GST Act, section 7, which defines supply. Then we are going to discuss section 2, various definitions, where specifically in this chapter the focus will be on goods and services, but that doesn't mean that we are going to only discuss goods and services definition in this topic. We are going to discuss other definitions also. Remember my friends, whenever there is any definition, unless otherwise said, you have to focus only on section 2. Section 2 of CGST Act. Friends, I am repeating at the cost of repetition, any section that is addressed, any rule number that is addressed during the discussion is only that of CGST Act 2017 for the section number, CGST Rules 2017 for the rule number, unless otherwise I specifically tell something about IGST. Right? So section 2 deals with all the definitions, and here we are going to discuss specifically goods and services. Are we going to discuss other definitions? Yes. Now one may wonder, sir, how many definitions are there in your CGST Act 2017? You'll be surprised that there are around 130 definitions, but don't worry. We are going to discuss definitions in such a way that you will not feel the pain that we have discussed all the definitions in different chapters. So we'll be discussing definitions at right place. Whenever they are required, we'll be discussing at the right place, and we'll not be repeating the definitions. Now I'll tell you the problem. When you refer your ICA module, the beginning of all the chapters of ICA module will be talking about definitions, and it will repeat many definitions. Thereby, one may wonder that you are going to see the definitions a lot, and you read the definition without knowing for what purposes are reading the definition. Right, so what we have done in our discussion, what we'll be doing is, whenever required, whenever we come across that term where it is very important to understand that definition, we'll take once for all, understand thoroughly. When I tell thoroughly, friends, you have to always remember that our thoroughly always means 360 degrees approach. We'll see all the sides, whatever possible sides are there, we'll see all the sides and try to understand that definition. Right, now friends, this is the only sections or the bird's eye view that we are going to discuss in this chapter. Now when you see the bird's eye view, you will feel that okay, only these are the provisions, which means section 9 which talks about levy of GST, right? Section 1 which talks about applicability of GST, section 7 which talks about supply, which has to be read along with schedule 1, supply without consideration, schedule 2, nature of supply, and schedule 3, which is neither supply of goods nor supply of services. And finally you have to see certain definitions under section 2, which we are going to see in all the chapters. Section 2 will be there in all the chapters. Here I have specifically mentioned because here goods and services are very, very important to understand. Therefore, specifically the focus will be on the definition of goods and services. So section 2 defines a lot of things. Even within this chapter, we are going to see a lot of definitions. It is not just we are going to restrict ourselves to goods and services. Lot of definitions we are going to discuss within this chapter also. But the main focus will be on the definition of goods and services. Right. Now, as we are going to do for all the topics, we will bifurcate the topics into multiple subtopics. Now, that will make your understanding very clear, and that will make the discussion also lighter. You will not feel the pain, okay, this topic is going on. No. We will be logically breaking up the chapter into multiple subtopics, which will make your understanding very clear. The first part will be always bird's eye view that we have gone through. Now talking about the first subtopic that we are going to discuss here. It talks about applicability and charging section, which is section 9, which means that we are going to discuss here about your section 1, which talks about applicability, and charging section 9. Right, we are going to discuss about these two provisions in the first subtopic, where we are going to discuss about applicability and the charging section. Now let us focus on applicability. Right, section 1 is a very simple section which tells that CGST Act is applicable to whole of India, including the state of Jammu and Kashmir. Right, so Jammu and Kashmir was always given special importance because of that article 370, which is now no more there. Still that provision remains the same. So it is applicable to whole of India, including the state of Jammu and Kashmir. Right, so when you talk about the section 1, it talks about a very simple concept that you are going to have GST Act applicable throughout India, including your state of Jammu and Kashmir. Right, and thereafter you have certain definitions. Friends, I already said that we are going to discuss a lot of definitions, and whenever definitions are there, the provisions which is dealing with definition is section 2. Should you remember the clause of the definition? Not required. So you can always remember that it is there in section 2. But nevertheless, when you talk about definition of India, now we know that section 1 is over. Section 1 is basically over. Section 1 just tells that it is applicable to whole of India, including the state of Jammu and Kashmir. That's all about section 1. Now the important thing is we should know what is meant by India. For knowing India, you have a definition by section 2 clause 56, which defines India. So section 2 clause 56 defines your India, and it tells that India has to be learned in 3 parts. One, you are going to read India in terms of land area. Another, you are going to see India in terms of sea area. And the last part, you are going to see India in terms of your air area. Right. For our convenience, we have divided the definition of India into 3 parts: land area, sea area and air area. And mind you, many provisions, rather most of the provisions, without your understanding, we are going to see only the Bare Act provisions. Rather, all the definitions that are used are using only your Bare Act provisions. Right. But what makes this understanding or this discussion simpler? This entire text or the entire discussion that we are going to have through this text, it will be in terms of your flow chart with multicolor. And in the introductory topic, I have already explained the importance of each and every color. For example, definitions will always be there in green shade, right, that we have already discussed in the introductory topic. So if at all you have any doubts with the color coding, either through the discussion you'll understand yourself that what is the importance of color coding, or you can always go to the introductory topic and understand the importance of the color coding, right. So one, we have multicolors. For each color will symbolize something. Everything has been well thought of and written. And second important thing, everything is given in form of table columns or pictures, which will ensure that your retention capacity is very high compared to others who just read the provisions just like that. You will be in a position to retain things for a longer time, and before retaining, you will be able to understand things in a very simple way. Now coming back to the definition of India, section 2 clause 56 defines India. Now we have to divide India into 3 parts: land area, sea area and air area. Now land area, India tells that India, first we are going to discuss the land area, which tells that it covers the entire territory of India, which is given under Article 1. Now what does Article 1 of Constitution tells? Article 1 of Constitution tells that territory of India comprises of all the states, all the union territories and other territories as are acquired by India. India may acquire other territories that will be also part of India. So land area is nothing but the map of India that you think of in simple language. The land area of India is nothing but the map of India that we think of the moment we understand India. I bet my friends, the moment I said the word India, everyone who's going through this discussion would have thought of India in a pictorial or geographical map. Now when you talk about India, obviously you'll see the entire map of India including Jammu and Kashmir. So that is nothing but the land area. Land area is telling that a simple point, that it is covering territory of India, which is given under Article 1 of Constitution of India. And what is Article 1 of Constitution of India telling? Article 1 tells that territory of India comprises of all the states, all the union territories and other territories which may be acquired by India or which are acquired by India. That is all about your land part. So first part, India, we have discussed about the land part. Second, we have to discuss about the sea area. Now when you talk about sea area, it tells that India includes territorial waters, seabed subsoil underlying such waters, continental shelf, exclusive economic zone or any other maritime zone as referred to in your territorial waters, continental shelf, exclusive economic zone and other maritime zones act 1976. It gives a reference to a very lengthy act which is called as territorial waters, continental shelf, exclusive economic zone and maritime zones act 1976. Now let us understand this in way of your pictorial presentation. Right, what it is trying to tell. First you have to understand that from the baseline, it always starts from the baseline. From the baseline you have to calculate 12 nautical miles, and that will give you your territorial waters of India or territorial sea. Territorial waters of India or territorial sea. And understand that This territorial waters of India, TWI or territorial sea, it was, it will be, and it is always sovereign part of India. We are talking about the sovereign rights of India on territorial waters of India. 12 nautical miles was always part of India, is part of India, will always be part of India. Where India exercises exclusive rights, sovereign rights. Where India exercises exclusive rights, otherwise called as sovereign rights. Now, that is for the purpose of other activities of the government not dealing with taxation. TWA is always taken as part of India with respect to your sovereign rights, which means that if you look at India, one side we have Arabian Sea, one side we have Bay of Bengal, and the bottom side we have Indian Ocean. Obviously, three sides India is covered by water. So TWA is very important for India, right? And what is TWA? It is nothing but territorial waters of India. Mathematically, it is equal to 12 nautical miles. The coverage is 12 nautical miles from the baseline. And if you have to understand, in this way. 1 nautical mile, mathematically it is equal to 1.85 kilometers. It is nothing but the measurement of distance in sea. When you go by road, you measure it by kilometers. When you go by sea, the measurement is by way of nautical miles. So it is approximately equal to 1 nautical mile is approximately equal to, my friends, 1.85 kilometers. Now coming back to the topic. Sea area, TWI will always be sovereign part of India. Now, India actually extends till exclusive economic zone, which is 200 nautical miles, which is 200 nautical miles. Again, starting from the baseline, the starting point is always the baseline. So when you talk about even 200 nautical miles, it starts from the baseline, exclusive economic zone. So when you talk about exclusive economic zone, India has got economic rights till 200 nautical miles, that is exclusive economic zone. You have to understand that after 12 nautical miles, not the entire area is belonging to India in terms of your GST, which is dealing with your economic rights. It is the designated areas in exclusive economic zone, which means that if at all I want to shade it, here when you talk about 12 nautical miles, this entire 12 nautical miles happens to be sovereign part of India. But if at all I am talking about after 12 nautical miles, within 200 nautical miles, remember my friends, this 200 nautical miles also starts from the baseline. This 200 nautical miles also starts from the baseline. The calculation is always from the baseline, 0 to 200. So that you don't forget. Don't try to calculate 200 nautical miles from 12. It always starts from 0. So when you talk about this exclusive economic zone, which again starts only from the baseline, where India is having economic rights for taxation purposes, for tax law purposes, Indian government can extend the sea area up to exclusive economic zone. Whether it will extend throughout the exclusive economic zone, it won't extend throughout the exclusive economic zone. It will extend only in designated areas. Right. So that is the understanding when you talk about sea area of India. Land area. What is land area of India? Let us again understand in a very simple way. What is the land area of India? Land area is nothing but territory of India, which is defined under Article 1. Territory of India under Article 1 is nothing but combination of states, union territories and other territories which are acquired by India. What is the sea area of India? Sea area of India is nothing but territorial waters and the sea bed and the subsoil under such territorial waters, and it may go beyond territorial waters when you talk about continental shelf and exclusive economic zone. So if at all I want to simplify it in terms of sea area, India extends it TWI fully, right? Sovereign rights. India extends till TWI 12 nautical miles fully, which where India is having sovereign rights, and after 12 nautical miles till 200 nautical miles, which is technically called as exclusive economic zone. Don't think that exclusive economic zone starts from 12, it again starts from 0. So after 12 economic miles till 200 after 12 nautical miles till 200 nautical miles. So post 12 nautical miles till 200 nautical miles, designated areas that will be taken as part of India. So technically you can tell that India extends till exclusive economic zone, that is 200 nautical miles. How you have to understand that? 0 to 12 nautical miles, the entire area belongs to India because India is having sovereign right. 12 nautical mile to 200 nautical mile, right? When you're talking about 12 nautical mile to 200 nautical mile, we are talking about the differentiation portion, that is 188 nautical mile. In that 188 nautical mile, the designated areas in exclusive economic zone will also be part of India because India is having economic rights over exclusive economic zone. Now, one may wonder, when we have seen this discussion, there was something called as contiguous zone also, which we have not discussed because now that relevance is not there. Contiguous zone, which means that when you are talking about 0 to 24 nautical miles, it is called as contiguous zone. So, you have three understanding, right? The first understanding is 0 to 12 nautical mile, territorial waters of India, where you are going to discuss about sovereign rights of India. Second, you have 0 to 24 nautical miles, which is called as contiguous zone of India. Third, you have 0 to 200 nautical mile, which is called as exclusive economic zone, where you are talking about economic rights. So after 12 nautical miles till 200 nautical miles, in designated areas, you do have economic rights where GST can be levied within that area also. If some activity is done by any company within that 200 nautical miles, then obviously GST will be applicable. We will try to understand the picture once we are clear with this understanding. So we have discussed the sovereign rights and we have discussed the economic rights, that is territorial waters of India, and we have also discussed exclusive economic zone. What about this contiguous zone of India? This contiguous zone of India, 0 to 24 nautical miles, was earlier relevant for your Customs Act, where Customs Act used to tell that customs officer control or the proper officer's control was earlier up to contiguous zone of India. Now even in customs, where you talk about customs control, even that is extended till EZ. So there is no significance of 24 nautical miles as of today. Why? Earlier in Customs Act, you had a provision where it was mentioning that it is actually called as Indian Customs Water. Indian Customs Water was initially up to contiguous zone of India, which means that there was customs control, customs right, customs officer control till your 24 nautical miles. Now, even under Customs Act, they have extended your customs control till exclusive economic zone. So, if I were to tell whether this contiguous zone of India, that is 0 to 24 nautical miles, is relevant now, it was never relevant in GST. It was relevant in customs. Now, in customs also it is not relevant. So, we are not going to discuss about this contiguous zone of India. Rather, if I were to summarize this, 0 to 12 nautical miles, territorial waters of India, India is having sovereign rights. It was, it is, it will always be part of India. 0 to 200 nautical miles, exclusive economic zone. Why I am mentioning 0? It always starts from the baseline. Exclusive economic zone, in the designated areas in exclusive economic zone, not the entire area, designated areas in exclusive economic zone, India can exercise economic rights. When I tell economic rights, India can collect taxes if some person is doing some oil exploration process or mineral exploration process in that particular area. So taxation rights is there with India. Now along with taxation rights, there is even customs right, which means that even proper officer has got control over that 0 to 200 nautical miles. That has got nothing to do with collection of taxes. Customs officer are not normal officers. They have dual purposes. One is revenue collection, other is controlling the situation of India in terms of terrorism activities or in terms of smuggling activities. So they act more like police officers, right? So you don't deal with a customs officer like the way you deal with GST officer. You cannot, right? You cannot think of dealing with a customs officer in the similar manner that you deal with your GST officer or your income tax officer. So 0 to 200 nautical miles, which is exclusive economic zone, India can have economic rights in the designated areas, which means that GST can be collected if at all an activity is done till that area 200 nautical miles, but it should be in designated area. And it is also serving one more purposes. Even customs officer will have the rights to check the vessel, stop the vessel, seize the vessel, even to the extent of shoot the vessel if the particular person inside the vessel, master of the vessel, is not obeying the instruction of the proper officer. So it has got dual purposes. One is economic rights, other is customs officers right. Now how to understand this entire discussion that we had? So when you talk about the sea area, if the supplier is located within your exclusive economic zone, which is 200 nautical mile, so if the location of the supplier is located here, it means that supplier has come under the ambit of GST. And if the supplier happens to be located, this is the first scenario, if the supplier happens to be located beyond this 200 nautical miles, GST will not be basically applicable on the supplier. Nevertheless, it may be applicable. So you have to understand this with a caution. So it may be a scenario where it may be a scenario of import of services and GST may be applicable, where GST will be collected from the recipient under reverse charge mechanism. So basically, if you just forget about that reverse charge mechanism, etc., if at all you want to understand on a general basis, forget about the exceptions, general basis, right? If at all supplier is located within that particular area, so when I'm talking about location of supplier and also I'm talking about place of supply, if it is there within this 200 nautical miles, things are safe, high possibility that GST will be there. So GST is going to be there. But if it is outside 200 nautical miles, generally GST is not there. I repeat, generally GST is not there. Why I am specific with the word generally? Exceptions may be there. So that is the significance of this sea area. Now coming back to the discussion of India, still we are discussing the definition of India. Where we started with section 1, applicability of GST, where it was said that GST is applicable throughout India, whole of India, including the state of Jammu and Kashmir. Then we wanted to understand what is India. The only way, when you have certain doubts with certain terms in law, you have to refer the definition section. You may get some help from that. So India is defined under section 2, clause 56, which tells that India has got a land area, which we have discussed, territory of India under article 1, sea area, which is sovereign rights is up to 12 nautical miles, but economic rights goes up to 200 nautical miles. That is exclusive economic zone. And air area, which talks about the territory of airspace above the territory of India and territorial waters. So when you talk about the airspace, it is only about the territory of India and about the territorial waters, not about exclusive economic zone. Only about the territory of India, the land area, and only about territorial waters. So that is the significance of this air area. So my friends, I presume that now you are very clear with the understanding of the term India, right? The understanding came from where? When we were trying to understand section 1, applicable to India, GST Act is applicable to whole of India, including Jammu and Kashmir. Now we are done with the definition of India. So once we are done, it is done forever. So whenever I tell India, you should remember land area, sea area, air area. Now friends, let us come to the next part. Once you are clear with the term India, now next important thing is you have to understand states and union territory. States and union territory, right? So when you talk about states and union territory, it is again defined. Anything that you have, that any terms that you have doubts will be defined in section 2 generally. Most of the times you find the definition in section 2, and there are times where you don't have that definition in section 2, where you have to resort to rules of external interpretation. You may have to refer some other acts, right? Now why state is discussed now? So you know India, now it is and you know that GST is applicable in which way? You have dual model of GST in India. What is the dual model of GST in India? if at all the supply is intra-state supply. If at all the supply is intra-state supply. Now what is intra-state supply? Intra-state supply, right, within the state. Then you have CGST plus SGST. If at all the supply is interstate supply, if at all the supply happens to be interstate supply, then you have IGST, which will go to the pocket of central government for the time being, but final revenue sharing will be by the between the central government and the destination state. So don't think that IGST entirely belongs to central government. Yes, it will go to the pocket of central government, and 50% will be retained by the central government, and the balance 50% will be given to the destination state. Why, my friends? GST is a destination based consumption tax. Now, whenever you are talking about this dual model, so what is the significance of dual model? Right, so you have to understand whether the supply is within the state, intra-state, or outside the state. So whenever you have that, there's a possibility where you talk about SGST. So the moment you talk about SGST, you should know which state or union territory. Understand that this could be even, if at all it is within the union territory, it will be CGST plus UTGST. You have to replace the state with union territory. There's no difference. If it is an intra-state supply within the state, it is CGST plus SGST. If it is an intra-state supply within the union territory, it is CGST plus UTGST, Union Territory GST. And so when you are talking about this SGST or UTGST, you should know what is state for the purposes of GST Act. Now, section 2 clause 103 defines state. Section 2 clause 114 defines union territory. Again, the definitions are there in section 2. You may not remember the clause, but remember section 2, right? So section 2 clause 103 defines state, and section 2 clause 114 defines union territory. It tells that states includes union territory with legislature, right? What are the two union territories which are with legislature? Delhi and Puducherry. My friends, it is Delhi and Puducherry. Now I'll stop at this juncture. I'll tell you something about Jammu and Kashmir, that now it is not a state, right? It has been divided into two, right? Why are we not discussing about that particular point? Friends, though the amendment is made applicable and it is effective as on date, the provisions are not yet made effective. The section numbers are not yet made effective. So as on date, the sections number are not made effective. That's one more point. Now in today's scenario, Dadar and Nagar Haveli and Daman and Diu are one and the same union territory. They are merged. They are actually merged. But still, we'll be discussing that separately because it is yet to be notified. Right, and finally, if ICA gives a clarification that no, now you have to read Jammu and Kashmir separately in form of two categories, and you have to merge Dadar and Nagar Haveli and Daman and Diu, I'll be clarifying you with a small update, and I'll be telling that now ICA is clarified, it is applicable for your exams, November 2020 exams. So we are not bringing that confusion now. I'll repeat it. Whether Jammu and Kashmir is state now, answer is no. Answer is no. It is no more a state. It has been divided into two union territories. So clear-cut answer is no. Right, one with legislature, one without legislature. So the answer is quite evident that it is no. But we are going to still learn Jammu and Kashmir as a state. Friends, you all know that after removal of Article 370, Jammu and Kashmir state has lost its special status. Right, now it has been divided into two. We are not touching that aspect. Why? Because the provision which makes it effective in the Act, the effective date is yet to come. But whether it is actually functioning as two parts, yes. In effectiveness, it is working as two parts. No doubt with that. But in provisions, right, there's no clarity. It is not yet notified yet in provisions. There's some problem with the Act. So that being the case, we are not discussing that separately. We are still treating Jammu and Kashmir as state. So mind you, if at all there is any further clarification by ICA telling that no, now you don't call Jammu and Kashmir as a state and you have to read it as two union territories, then we'll be having a small correction lecture where we'll be telling that no, you have to read this particular Jammu and Kashmir in this aspect. So till then we'll be reading Jammu and Kashmir as a state, because most of you are very much aware that no more it is a state and it has been divided into 2 union territories. One should not have doubt why we have not discussed this in our lecture. Right. Another point, again, Dadar and Nagar Haveli and Daman and Diu, which were 2 separate union territories, now they are 1. But still, again, there is some problem with the provisions where the effective date is yet to be notified. Therefore, we are going to discuss them as separate union territories even now. So if ICI further clarifies that no, you have to read those 2 union territories, that is Dadar and Nagar Haveli and Daman and Diu as one, then we will be reading it as 1. Right. So we are not discussing the special feature with respect to Jammu and Kashmir, which practically it is effective, but there is some problem with the provisions in the Act. We are not going to discuss about Dadar and Nagar Haveli and Daman Diu as 1, which practically is effective. It is today 1, but there is no clarity in the provisions. The effective date is yet to come. Therefore, we are going to discuss them as 2 separate union territories. So that you have to keep in mind, and in any updates, we'll be getting those updates for sure. Now, let us talk about state. Right. So when you talk about states, how many states are there? You are talking about 29 states. You are talking about 29 states. Friends, I am counting even Jammu and Kashmir as a state, as a caution. Right. Plus 2. Why plus 2? Because there are 2 union territories, Delhi and Puducherry. Delhi and Puducherry, which are having their own assembly. Right. Which are having their own legislature. Which means that union territory state legislature is equal to Delhi and Puducherry. Therefore, for the purpose of GST, it will be 31 states. Rather, even if you read Jammu and Kashmir into 2 and you try to apply the same formula, the formula will be 28 plus 3. Again, you will come at the same result, 31. So, there is no difference in the end result. Obviously, the process has changed, but the end result will be still 31. Right. When you talk about union territories, you are talking about Andaman and Nicobar, Lakshadweep, you are talking about Dadar and Nagar Haveli, Daman and Diu, and you are talking about Chandigarh and other territories which have been acquired by India. So basically 5 union territories plus other territories. What are the 5 union territories? You are talking about Andaman and Nicobar, you are talking about Lakshadweep, you are talking about Dadar and Nagar Haveli, you are talking about Daman and Diu, and you are talking about Chandigarh. So it will be 5. You are talking about 5 union territories. How you get this 5? Totally 7 union territories minus 2. The end result is 5. Now my friends, even if you try to merge Dadar and Nagar Haveli and if you try to merge Daman and Diu, even then the answer will be the same 5. Now I'll tell you how. Let us assume that tomorrow ICA clarifies that Jammu and Kashmir has to be read as 2. Right. So let us assume, so that even if at all ICA clarifies, now this discussion for the next 5 minutes that we are having is with an intention that if at all ICA clarifies the applicability of Jammu and Kashmir state into 2 union territories, one with legislature, one without legislature, and the merger of 2 union territories, Dadar and Nagar Haveli and Daman and Diu, the end result will be the same. So as of now, how many states are there with respect to GST law? It is 29 states, which includes Jammu and Kashmir, plus 2 union territories, Delhi and Puducherry, which are with legislature. So it is 31. Right. When you talk about union territory, as of now, how many union territories are there? It is 7 union territories minus 2, because Delhi and Puducherry, they are union territories with legislature, which will be called as states. So it will be 5. Now assume that Jammu and Kashmir, which is no more a state, it is divided into 2. Right, one is a normal union territory, one is a union territory with legislature. So you are talking about Jammu and Ladakh. One is a normal union territory without legislature, one is a union territory with legislature. What will happen? What will be the end result? After change, what will be the end result? The end result would be 28 states. Why? Jammu and Kashmir is no more a state. Simple. Plus 3. Why plus 3? Jammu and Kashmir state is no more a state. Now it has been divided into two. What is the bifurcation? One is Jammu and one is Ladakh. One is with legislature, one is without legislature. So 28 plus 3. Now in addition to Delhi and Puducherry, you will have one more union territory of Jammu and Kashmir which is with legislature. So 28 plus 3 which will be equal to 31. Right. So the answer remains the same. The answer remains the same. Right. Now let us come to union territory. Union territory, assume that now Dadar and Nagar Haveli and Daman and Diu are merged and it is practically effective. Assume that ICA clarifies that even for your exam it is now merged. Now if it is merged, what will happen? What will happen is, in addition now, instead of 7, you will have how many union territories totally? It will be 7 minus, you are going to put minus 1. Why? Dadar and Nagar Haveli and Daman and Diu are now 1, minus 1. But wait, plus 1. One part of Jammu and Kashmir is union territory without legislature. Minus 3, because totally after this merger of Dadar and Nagar Haveli and Daman and Diu, and after bifurcation of Jammu and Kashmir into one union territory which is without legislature, total number of union territories would be, rather I have to correct one thing, total number of union territories would be 7 minus 1, because Dadar and Nagar Haveli, Daman and Diu has become 1, so minus 1, so you are removing 1, plus 2 because Jammu and Kashmir state is now divided into two union territories, one with legislature, one without legislature, and minus 3. Why minus 3? Totally thereafter there will be 3 union territories with legislature. So finally the end result would be same 5. Seven minus 1 will give you 6, plus 2 will give you 8, and finally you are talking about minus 3 will give you 5. End result will be the same. Even after ICA clarifies that we are going to do this merger, end result would be the same. Okay, to make it more clear, what will be the union territory post this merger and post the bifurcation? Right. So you are talking about the 5 normal union territories that will be there, minus 1 because Dadar and Nagar Haveli and Daman and Diu has become 1. Right. Why I am talking about 5? I am not counting Delhi and Puducherry. Okay, let us start with counting even Delhi and Puducherry. Before these amendments, there were totally 7 union territories. Right. Minus 1. Why? Dadar and Nagar Haveli and Daman and Diu have become 1. So you have to reduce 1. Plus 2. Why? Now Jammu and Kashmir state is no more a state. It has become 2 union territories, one with legislature and one without legislature. Minus 3. Why? Whenever you are talking about this minus 3, you have to understand that these are the 3 union territories. There are totally 3 union territories with legislature. So finally the end result will be the same, 5. Alright. So even if ICA clarifies that no, now you are not required to read Jammu and Kashmir as a state. You are going to read it as 2 union territories, one with legislature, one without legislature, and you are going to read Daman and Diu and Dadar and Nagar Haveli as merger of only one unit, as merger, and now it is only one union territory. Even then the end result has not changed. So if you see the end result, it has not changed. So end result has been the same. Right. Now coming back here, we are not sure what will be the clarification which will be given by ICA. So as of now, we have understood both. What if that clarification doesn't come? So you have to read with the old provisions. We have seen the old provision. And what if the new provisions are there? What is the new provisions which is going to be there? It is bifurcation of Jammu and Kashmir state into 2 union territories, one with legislature and one without legislature, and it is merger of Dadar and Nagar Haveli and Daman and Diu into one union territory. So that is the amendment. Now forget about those points because it is not clear whether those will be applicable for your November 2020 exams. Coming back here, we are talking about state as of now. There are 29 states plus 2 union territories with legislature. For the purpose of GST, there are 31 states and union territories defined under section 2 clause 114, out of 7 union territories minus 2 Delhi and Puducherry which are with legislature. So totally there are 5 union territories for the purpose of GST Act. So whenever it is GST Act, states are 31 and union territories are 5. Now what is the significance of that? Understand that if Delhi is called as a state, whenever you talk about supply within Delhi, right, let us take an example to understand this particular point, what difference it makes if you talk about a union territory, if you talk about a state. So we'll take an example where we are talking about Delhi, right? So it is a supply from Delhi to Delhi, or we are talking about say Andaman and Nicobar to Andaman and Nicobar. So if you're talking about Delhi to Delhi, the transaction will be an intrastate supply. I have taken an example of intrastate supply. The taxes would be CGST plus Delhi state SGST. Delhi SGST. Whereas when you talk about Andaman Nicobar to Andaman Nicobar, again it is an intrastate supply. So supply is an intrastate supply. Intrastate supply means within the state or within that union territory. But the taxes now would be CGST plus union territory GST. Now the difference lies here. Each state will have the right to make their own respective state GST Act. Each state will have their own GST Act, state GST Act. Whereas when you talk about union territory GST, for all the union territories without legislature, there is only one act called as union territory GST Act. So that is going to be the difference, right? So that was the point that we wanted to understand. And now if you look at the definitions, see what we have seen till now was, the first part was understanding section 1 that India is applicable to whole of India including Jammu and Kashmir. We understood India, right? Then we understood what is meant by state and what is meant by union territory for the purpose of GST. So we have understood what is meant by India for the purpose of GST, what is meant by a state for the purpose of GST, what is meant by union territory for the purpose of GST. Friends, now onwards, whenever I tell states, in your mind it should be 31 states. You should not have a second thought. The moment I tell states, it should be 31 states for you. Even after the clarification, assume that the ICA clarifies that Jammu and Kashmir no more a state and it is 2 union territories, one with legislature, one without legislature, and there is merger of Dadra and Nagar Haveli and Daman and Diu into one union territory. Even after that, the numbers will be the same. So for the purpose of GST, there will be 31 states. And for the purpose of GST, there will be 5 union territories, obviously plus other territory acquired by India. So 5 union territories plus other territory which is or which may be acquired by India is called as union territory. Now, friends, there is something called as special category states. And mind you, now onwards, whenever we have this thought process of India, state or union territory, you should fall back on these definitions. So there won't be any repetition. So once for all, we have made it very, very clear. So all these things should be there, stored in your subconscious mind. Every time when I tell you, you should always think of India in the way that we have discussed land area, sea area and air area. Whenever we are going to discuss about state or union territory, the thought process should come that we are going to discuss about those 31 states for the purpose of GST and 5 union territories for the purpose of GST. So that should come automatically, right? In addition to that, we have something called as special category states. Now, what is that special category states? See, special category states is not given under or not specifically defined under GST Act. It is taken from your constitution. Article 279A 4G. Article 279A 4G defines special category states, and there are in total 11 special category states. Now, how to remember that? We are going to go with mathematics. Friends, I don't know how many of you are in love with mathematics, but my love, though it is indirect taxation, my first crush was always mathematics. So we are going to discuss here and there basic mathematics. So please cope with that. Now, total special category states as per your constitution, that is article 279A 4G, is 11. Why we are going to bifurcate? We are going to bifurcate for simple reason. to make things very simple, write 8 northeastern states and 3 hilly area states. 8 northeastern states and 3 hilly area states. What are the 8 sister states, northeastern states? We are going to talk about Assam, Arunachal Pradesh, Meghalaya, Manipur, Mizoram, Nagaland, Sikkim and Tripura. This is very simple to remember, right? So the moment you bifurcate 11 special category states for the purpose of constitution, that is article 279A 4G, it has to be bifurcated into 8 plus 3. Now what is 8? 8 are northeastern sister states. We call them as sister states. And simple, you are talking about Assam, Arunachal Pradesh, Meghalaya, Manipur, Mizoram, Nagaland, Sikkim and Tripura. And 3 hilly area states. You are going to talk about Himachal Pradesh, Uttarakhand and Jammu and Kashmir. Himachal Pradesh, Uttarakhand and Jammu and Kashmir. Now you will tell that what is this? We have understood the significance of India. Why we have discussed, we know that. We have understood the significance of state and union territory. Why we have discussed that? We have understood that. Now what is the significance of special category states? Now special category states significance will be discussed in a chapter called as small dealers. So there's a clear cut note mentioned. Whenever there's a linkage to the other topic, you will find that in dark green shade, telling that though we have discussed here for some logical reasons, but the importance of the significance will be understanding in another chapter. So that gives a linkage to the other chapter, and that linkage will always be there in dark green shade with the white wordings. So we are going to understand that it's small dealers. So as of now, keep it on hold, but remember what is special category states. Now understand that whenever you are going to understand special category states, there are 2 ways to understand special category states. Special category states in terms of constitution and in terms of GST Act. Special category states in terms of constitution is 8 plus 3. That is 8 northeastern states and 3 hilly area states. We are talking about Assam, Arunachal Pradesh, Meghalaya, Mizoram, Manipur, Nagaland, Sikkim, Tripura. 3 hilly area states, Himachal Pradesh, Uttarakhand and Jammu and Kashmir. But for the purpose of GST Act, right, special category states has been condensed, right? Not all these 11 states are actually special category states for the purpose of GST Act. By the way, you have to remember both. What is meant by special category states as per Constitution, Article 279A 4G, and what is meant by special category state for the purpose of GST law. Now here it is only 4. Here it is only 4. Now how to remember that? We are talking about what 4 categories? Tripura, Manipur, Mizoram and Nagaland. Rather, we'll just change the sequence for one specific reason. The answer is the same, but we'll write Manipur, Nagaland and Mizoram. Now I'll tell how to remember these 11 special category states. We have remembered in a very simple way as per Constitution, 8 northeastern states and 3 hilly area states. But how to remember these 4 special category states as per GST law? It's again quite simple. Now in India, for you to be a good person in politics, or for you to be a very successful person in politics in India specifically, you require 3 things. Tripura, you require 3 things. So here we are talking about try. One is money, isn't it? The moment you are talking about politics, the first thing that comes to your mind is money, right? So you are talking about money. The other is land, obviously followed by money. You are going to talk about land, easy way of hiding your black money, land. And most importantly, for you to be a good person or a successful person in politics, you always have to mix politics with God, Ram. Though it is not ethical, but that is the reality. So you're talking about 4 special category states as per GST law. And friends, we have made it very simple. You're talking about Tripura, you're talking about Manipur, you're talking about Nagaland and you're talking about Mizoram. How to remember that? We require 3 things for us to be successful when you're talking about politics in India. I don't want you guys to follow this policy, but only for understanding, ease of understanding purposes we are discussing that. Nevertheless, come back. For any political person to be successful, he will have three mantras. One is money, one is land, and one is Ram. That is Tripura, Manipur, Nagaland, and Mizoram. So that is special category states, which was divided into two parts. One, special category states as per constitution, and second, special category states as per GST law, which is given under explanation to section 22. What is section 22? It talks about registration. We'll be discussing about that in our further discussion, right? So now we are clear with applicability. Section 1, which talks about applicability to whole of India, including the state of Jammu and Kashmir. And then we have understood what is actually India, what is actually state and union territory for the purpose of GST Act. We went a step ahead and we have also discussed the relevance of special category states, or the definition of special category states as per your constitution and as per GST law. We are yet to discuss the importance of special category states. Rather, we know why we have read India, we know why we have read state, and we know why we have read union territory. But it is yet to be made very clear why we are dealing with the special category states. That would be made clear in your chapter called as small dealers. So in small dealers, I'll bring you back. We are going to revise that special category states again, so that things are very, very clear. Now, why was it discussed there then? See, whenever you are discussing about India, states, union territory, it is quite logical to also complete special category states. That was the only purpose why special category states was also discussed along with that. Now friends, we are talking about the next part of the same discussion, where you are going to discuss about charging section, section 9. Section 9. So when you are going to discuss about the section 9, basically the charging section of GST Act is section 9 of GST Act. We are discussing section 9 of GST Act. And the corresponding charging section in IGST Act is section 5. I clearly said, till I tell that this is a provision of IGST Act, all the provisions that we are discussing, my friends, are only of CGST Act. Now, for the time being, we will also be discussing about IGST Act for the time being. So now it is section 9 of CGST Act read along with section 5 of IGST Act. Both are dealing with charging section. Mind you, my friends, there is no much difference. Section 9 will be talking about intrastate supply, and section 9 of CGST Act will be talking about intrastate supply. So here the discussion will be about intra, and section 5 will be talking about interstate supply. And there will be a small difference which we will be discussing in the end. Otherwise, whatever is there in section 9 of CGST Act is exactly there in section 5 of IGST Act, with one small difference that will be taking in the end. Alright, so basically they are the same. The difference is section 9, if it is of CGST Act, obviously the wordings will be intrastate supply. If it is IGST Act, obviously the wordings will be interstate supply. So there you have to be very, very careful. So basically now we are going to see the corresponding provision of IGST Act. I'll repeat at the cost of repetition, my friends. Till I tell, you should always remember that the provisions are only of CGST Act. Now I specifically said that now please even connect IGST Act. So it is section 9 of CGST Act read along with section 5 of IGST Act. Now when you talk about the charging section, you can easily bifurcate the charging section into 6 parts, 6 P's. We call it as 3 plus 3. 3 P's plus 3 P's. Again mathematics. 3 plus 3 P's. So we are having totally 6 P's. Right? What are the 6 P's? 1, it is product. Second, it is process. Third, it is place. Right? So first you have to satisfy the first 3 P's. Only then you can go to the next 3 P's. Before fulfilling the first 3 P's, don't try to enter inside the next 3 P's. Once you tell that the product that you are dealing with, it is goods or services, and then you tell that the transaction is supply, and it is either interstate supply or intrastate supply. So once you tell that your product is either goods or services and your transaction is supply and it is either intrastate or interstate, once you satisfy all the 3 P's, what is the product, my friends? Goods or services. What is the process, my friends? A very important term, supply. And what is the place, my friends? It is either intrastate or interstate. Intrastate within the state or within the union territory. Interstate from one state to another state, from one union territory to another union territory, from one state to a union territory, or even between two countries, India and the other country. You are talking about interstate, right? So the first three P's are quite clear: product, process, and place, right? Now, when you talk about the next three P's, once you satisfy the three P's, then you are going to talk about valuation. So let us come to a logical point. Supposing you are talking about paying GST, so you ask yourself, the item that you are dealing with, is it goods or services? Yes. Then you have satisfied the definition term product. Ask next question, whether the activity that is happening, is it supply? If it is yes, then go to the next step. Then ask yourself, is it intrastate, within the state or within the union territory, or is it interstate? So you'll get either or answer, intrastate or interstate, right? Because if it is intrastate supply, you'll have CGST plus SGST if it is within the state, or you'll have CGST plus UTGST if it is within the union territory. And if it is interstate supply, it will be IGST. So once you ask these three questions, it is very, very clear that you are going to have GST. So once you have GST, you have to calculate GST. So you will require value and you will require rate. The moment you are very clear that GST will be there, the next thing is you require value and you require rate, and that value is nothing but price, transaction value, and that rate is nothing but percentage, right? You are going to discuss about percentage. So you are talking about the next two P's, price and percentage. The moment you satisfy first three P's, is your item goods or services? Yes, you have satisfied product. Whether your activity is supply? Yes, you have satisfied process. Whether it is intrastate supply or interstate supply, you have to give an answer and you will satisfy place. So once you go through these three P's, GST will come. The moment you calculate GST, the formula will be value multiplied by rate. So if you want to know the value, you are talking about price. So assessable value as per section 15 you have to refer. You have to refer a provision of GST where it will be dealing with assessable value. And then you have to find the percentage. Assuming that you have to calculate GST, there are two factors that are required. One is assessable value, the other is rate, right? For assessable value, you are going to refer to provisions. One of the provision of CGST Act which talks about assessable value, that is section 15. And if you want to know the rate, you have to see which category it is falling. So 5 rates you have in GST: 28%, 18%, 12%, you have 5% and 0. These are not the only 5 rates, but the main 5 rates that you have: 28%, 18%, 12%, 5% and 0. But wait, if at all it is IGST, it will be same: 28%, 18%, 12%, 5%, 0%. If at all you are talking about interstate supply. If at all you are talking about intrastate supply, you will have CGST and SGST. You will have CGST and SGST. If at all the rate is 28%, what would be the CGST? 14, SGST 14. If at all the rate is 18%, what will be the CGST? 9%. What will be the rate of SGST? 9%. If at all the rate is 12%, CGST would be 6, SGST would be 6. If at all the rate is 5%, CGST would be 2.5, SGST would be 2.5. And if at all the rate is 0, CGST will be 0 and SGST will be 0. So, depending on the type of supply, if it is interstate supply, the rate is the same: 28, 18, 12, 5 or 0. If it is intrastate supply, you will be having CGST and SGST. So, you have to break the rate. So, if the rate is 28, CGST is 14 and SGST is 14%. If the rate is 18%, CGST is 9%, SGST is 9%, and so on, so forth. Right. But wait, you have to understand that these are the applicable rates. These are the applicable rates as of now. But IGST Act tells that the maximum rate which can be there for IGST as of today is 40%. And CGST Act tells that the maximum rate which can be there for CGST as of now is 20%. Now, let me be very clear. You have to be very cautious with the wordings. If the question does that, what is the maximum rate which can be there as per IGST Act? The answer should be 40. The answer should be 40%. And if the question tells that, what is the maximum IGST rate which is applicable as of today on the products? Then the answer should be 28. So you have to be very careful. What is the highest possible rate as per Act? It is not 28, it is 40% if it is IGST. And if the question is talking about CGST, what is the highest possible rate as per the provisions of CGST Act? The answer should not be 14%, my friends. Answer should be 20%. So you have to read the question very carefully. Are they talking about the highest rate which is applicable as of today? If that is the case, the highest rate which is applicable as of today for IGST is 28% and for CGST and SGST it is 14% each. And if they are talking about what is the highest rate which can be there as per IGST Act, then the answer, my friends, is not 28% for IGST. The answer is 40% for IGST. And if at all it is CGST, then the answer is not 14%, my friends, because as per CGST Act, the highest rate which can be there is 20%. Now again coming back here. Now first 3 P's you have to ask basically, and only then you have to go to the next 3 P's. What was the first P, my friends? Is your item either goods or services? Yes, go on to the next. Right. Whether your activity is supply. If the answer is yes, then go on to the next. Then ask yourself whether it is an intrastate supply or interstate supply. Right. So basically you have addressed 3 questions: product, process and place. And after that, if at all it is satisfying all the first 3 P's, then ask the next P. You have to calculate GST now. So you should know the next P, price. What is the price? Which means that you are talking about accessible value as per section 15. Then you have to ask the rate. What is the applicable rate on that particular goods or services? Right. So the applicable rates as of today is either 28 or 18 or 12 or 5 or 0%. Normally, there are special rates also. Normally these are the applicable rates. Right, but what is the highest possible rate as per IGST Act? The highest possible rate as per IGST Act is 40%, and the highest possible rate as per CGST Act is 20%, and as per SGST Act, respective SGST Act is 20%. In that Act, not the applicable rates, the highest possible rates as per the provisions of the Act. Now that is the 4th P, price, and the 5th P, percentage. Now what is the last P? Person. You have to ask one more question. Okay, once you have calculated your GST by using this accessible value multiplied by the rate, you have calculated your GST. The moment you calculate your GST, then you should ask who is going to pay. The person who is going to pay should be taxable person. He should not only be, don't call it as person, he should be taxable person. He should be taxable person. We have definition of taxable person which we are going to discuss in some time. It should be taxable person, right? And that taxable person has to pay. Normally that taxable person you are talking from the angle of supplier, which means that supplier has to pay GST to the government. So if I am selling you goods or I am giving you my coaching class services to you, I am the supplier and you guys are the recipient. So normally government expects supplier to pay tax to the government, which is called as forward charge mechanism. Why it is called as forward charge mechanism? Because supplier will collect tax from recipient. Go back to the basic concept, my friends. We have discussed very clearly that indirect tax, the burden can be shifted. So if I am charging say 10,000 plus GST 1,800, I will be collecting totally 11,800 from you, my friends, and out of that 11,800 to the government I will be paying GST portion 1,800. So normally when you are talking about taxable person, normally when you are talking about your taxable person, you are talking from the angle of supplier normally, which is called as forward charge mechanism. But it can be the other case as well. You can talk about taxable person being even recipient in rare cases where you talk about RCM. Exceptional cases, you are talking about exceptional cases. What will happen, friends, in that scenario? Friends, then I'll not collect GST from you because I am not required to pay tax to the government. If I am the supplier, you guys are my recipient, I am not required to pay GST to the government. I'll only collect 10,000 from you, and you guys are going to pay to the government GST amount to the government. Assume that the GST rate is 18% in both the scenarios. You guys are going to pay 1,800 to the government. So this is how the sequence would be when you're talking about taxable person. How? If at all it is forward charge mechanism, supplier will pay tax to the government. What will supplier do? Supplier will collect price plus GST from the recipient, because in indirect taxes you can shift the burden, and I am the supplier, you are the recipient. I'll collect 10,000 my price plus GST 1,800 from you, and I'll pay only 1,800 to the government. That is forward charge mechanism. So normally taxable person is a supplier. Normally taxable person happens to be supplier. Can he be recipient? Rare cases, yes, the taxable person can also be recipient, where you are talking about reverse charge mechanism. Why it is reverse charge mechanism? Now supplier will not pay GST to the government, it is recipient. You guys, if you guys are the recipient and I am the supplier, now you guys are going to pay GST to the recipient. So what is the only amount that I am concerned with? I am going to collect only my price, 10,000 from you, and you guys have to pay 1,800 to the government. That is called as reverse charge mechanism. Right, though that topic reverse charge mechanism we are going to discuss it separately, and we are going to repeat the same concept there again to make sure that you revise again this entire concept. As of now, you understand that the person who is required to pay the tax is taxable person. Is taxable person. Have we discussed FCM, RCM? We have not even started. So that entire discussion of FCM and RCM that we had in the last 5 minutes, we'll be discussing again, and we'll be having more clarity when you talk about your forward charge mechanism, reverse charge mechanism. Now coming back here, my friends, please come back. If at all your mind has gone somewhere, please come back. My friends, you have to understand that there are totally 6 P's which are relevant for levy section 9. What are the 6 P's? Product should be either goods or services. Your process should be supply, and the place should be either intrastate supply or interstate supply. If you go in reverse order, it should be either intrastate supply of goods and services or interstate supply of goods and services. Once the first 3 P's are satisfied, you go to the next 3 P's, which means that once you have to calculate GST, you have to know the price and percentage. That is 4th and 5th P. Assessable value is the price, and the rates which are there is the percentage. Right, what is the maximum rate which can be there in IGST Act? It is 40, my friends, not 28. What is the maximum rate that can be there in CGST Act or SGST Act? Respectively, it is 20 and 20% respectively. But what are the present rates as of now? 28, 18, 12, 5 and 0. If it is IGST, the rates will be the same: 28, 8, 18, 12, 5 and 0. If it is CGST, SGST, you have to read it as 14%, 14% for 28, and 9%, 9% if the rate is 18, 6%, 6% if the rate happens to be 12, 2.5% CGST and 2.5% SGST if the rate happens to be 5, and 0% CGST and 0% SGST if the rate happens to be 0. Right? And finally, when you calculate the tax, someone should pay the tax. Now, who is the person who is going to pay the tax? You know that GST levy is there. You have calculated the value, you have calculated the rate. Now the last question which comes up, okay, now who is going to pay the tax? It is taxable person who is required to pay the tax. What is meant by taxable person? We'll be discussing at the right place. So when you're discussing the chapter called as RCM, we'll be discussing much about taxable person. But don't call it as person. You have to call it as taxable person. The moment you talk about person who is required to pay the tax, it is taxable person. Now, my friends, this provision is there in the same manner when you talk about your CGST Act section 9 or IGST Act section 5. In IGST Act, there is one more point which is not there in CGST Act. My friends, I said in the beginning that whenever you are talking about the provisions, section 9 of CGST Act and section 5 of IGST Act are basically the same. So whenever you are talking about section 9 of CGST Act, which talks about intrastate supply, and section 5 of IGST Act, which talks about interstate supply, they use the same language, which means that you're talking about same thing. You're exactly talking about the same provision. Now you'll tell, what is the difference then? The difference is there only in the difference there is there only in IGST Act, where you're going to talk about a special category, my friends. What is that special category, my friends? That special category happens to be there only in IGST Act, which talks about import of goods. Which talks about import of goods. So that provision is there only in section 5. Basically, they are one and the same. Now there is something extra in section 5 of IGST Act. There is something extra. Now what is that extra? That extra point is only about import of goods. Otherwise, section 9 of CGST Act and section 5 of IGST Act, which are the charging sections of CGST Act and IGST Act respectively, talks about the same thing. The only difference that you can find is CGST Act would talk about intrastate supply and IGST Act would talk about interstate supply. But there's one point which is extra there in IGST Act, which is not there in, this point is not there in CGST Act. What is that extra point which is there? It talks about your import of goods. Understand, my friends, whenever you talk about this import of goods is always interstate supply. Why interstate supply? Understand that we have discussed very clearly, when you talk about intrastate supply and interstate supply, roughly, now we are not going into depth, we will be going into depth in some time later within the same chapter, but roughly, if it is from say Delhi to Delhi, it is CGST plus Delhi SGST intra. If at all you are talking about say Andaman and Nicobar to Andaman and Nicobar, it is again CGST plus UT GST, because Delhi happens to be state for the purpose of GST. It is a union territory with the legislature. In both the cases, we are talking about intrastate supply. We are talking about intrastate supply. Now these were the first two examples. Now let us move on to the third example. When you talk about the third example, if I tell, if it is Delhi to Maharashtra, the answer would be IGST, because now this happens to be interstate supply, one state to another state. And if I tell that it is Andaman and Nicobar to Lakshadweep, again this happens to be IGST, because again it is interstate supply. You don't call it as inter-union territory supply, it is still interstate supply. One state to another state, it is intra. One union territory to another one state to same state, it is intra, CGST plus that state SGST. One union territory to the same union territory, it is again intra, CGST plus UTGST. But if it is one state to another state, it is interstate, IGST. If it is one union territory, Andaman and Nicobar, to another union territory, Lakshadweep, it is again IGST, interstate supply. If at all it is one union territory, Andaman and Nicobar, to a state, Delhi, again it is IGST, where you are talking about interstate supply. So if I want to summarize example number 1, Delhi to Delhi, one state to the same state, intra, CGST plus Delhi SGST. Andaman and Nicobar, second example, Andaman and Nicobar to Andaman Nicobar, one union territory to the same union territory, again it is intrastate supply, CGST, now it is plus UTGST. If it is one state to another state, that is third example, Delhi to Maharashtra, IGST, because it is interstate supply, one state to another state. Fourth example, Andaman and Nicobar to Lakshadweep. Again, it is interstate supply. Therefore, IGST. Why? It is one union territory to another union territory. And fifth example, one union territory to another state. That is Andaman and Nicobar to Delhi is union territory to state or vice versa. Again, it is interstate supply. Therefore, IGST. Now, till here it was very clear in our earlier discussion also, my friends. Now, if it is from one country to another country, the sixth example was the entire focus of our discussion. Rather, we have understood the first 5 examples only to understand the sixth example. Supposing if it is from USA to India, USA to India, right, where you are talking about import of goods. The goods are being imported USA to India, right. The first thing that you have to understand, we are not discussing about services, mind you, my friends. We are discussing about import of goods. Import of services will be dealt separately. We are discussing now about import of goods. This import of goods will attract what? Customs duty, because customs duty is still alive. My friends, you have to interlink the provisions. In the earlier chapter, GST in India, we have clearly discussed that customs duty is still alive. Rather, we have also discussed the breakup of customs duty. It will be BCD plus SWS plus IGST. Why? When you talk about one country to another country, then also it is interstate. You don't call it as inter-country, it is interstate. But basically, levy is of customs, not of GST. Why? Because we are dealing with what? Goods. Import of goods is covered by Customs Act 1962, where you have customs duty, and the breakup of customs duty is basic customs duty plus social welfare surcharge plus IGST. Friends, we have already discussed IGST was replacement of countervailing duty, which was duplicate of excise, and special countervailing duty, which was duplicate of VAT. Now you have IGST. Now you have clearly understood why you have IGST. Friends, you have IGST because it is interstate supply, interstate transaction. One country to another country is also interstate transaction. Therefore, it is IGST. Friends, this provision of IGST will be discussed only in IGST Act. It won't be discussed in CGST Act. It cannot be discussed because that supply is always interstate supply. So that was the special point which you find in section 5 of IGST Act, which is not there in section 9 of CGST Act. I wanted to drag home this particular point. Basically, section 9 of CGST Act, which is the charging section of CGST Act, and section 5 of IGST Act, which is the charging section of IGST Act, talks about the same thing. The only difference that you can find out is CGST Act section 9 will talk about intra-state supply, and section 5 of IGST Act will talk about interstate supply. There is an extra point which is there in IGST Act, which is not there in CGST Act, because that extra point talks only about import of goods. And friends, we have clearly discussed in the 6th example that whenever you are talking about import of goods, that is USA to India import of goods, right, it will be customs duty which is applicable. Friends, please don't get confused. Import of goods will have Customs Act applicable on it. Therefore, customs duty will be there as per Customs Act 1962. And the breakup of customs duty will be BCD plus SWS plus IGST. Within the breakup of customs duty, you have IGST. And for that IGST, you require a provision in IGST Act. For that IGST, you require a provision in IGST Act. Now, if I don't discuss here import of services, I am sure you will have that doubt in your mind always. So, I will even take this point. We will be discussing about in the same example in further discussion also when we are discussing about a chapter called as RCM, but I will complete this point also. I know, my friends, your mind will be thinking, okay, we have discussed about USA to India goods. What about USA to India services? USA to India services is import of services, and that will attract, my friends, only and only IGST, because one country to another country is again nothing but interstate supply. If it is interstate supply, obviously you will be having IGST. right? Import of services is not covered by Customs Act. Rather, Customs Act 1962, my friends, deals only with goods. Deals only with goods. And if it is import of services, one country to another country, by default it is interstate supply, and normal provisions of IGST Act, section 5 of IGST Act will apply. So it will be only IGST. If at all you want to differentiate, you can clearly differentiate. If it is import of goods, USA to India, it is customs duty. But if it is import of services, USA to India, it is only GST, and specifically it is IGST. Why IGST? Because it is again interstate supply. Is there a special provision for this? No, it is a normal provision for import of services. It is from one country to another country. It is interstate supply. Normal provisions of section 5 will apply. The special provision is only for import of goods. USA to India, where you are talking about goods are imported, you have customs duty, and the breakup of customs duty is BCD, SWS, IGST, and when that IGST is there within customs duty, you require a special provision. You require a special provision in section 5 of IGST Act. So when you go to section 5 of IGST Act, there is a special provision in section 5 of IGST Act which is not there in section 9 of GST Act, because that section 5 of IGST Act, where we are talking about special provision, discusses only about import of goods. And my friends, import of goods is always interstate supply. And my friends, interstate supply will be discussed only in IGST Act. So when you talk about that particular point, product there is only goods. We are not talking about services. Import of services is also covered by IGST Act, but normal provision itself. Process is import. Place is India, which in a simple language means you are talking about import of goods in India. And the price there will be the value as per Customs Act, that is Customs Tariff Act 1975. So for the price for IGST you have to refer. When you are calculating IGST within customs duty, for finding that price you have to refer Customs Tariff Act. And maximum IGST percentage which will be there within that customs duty. Customs duty will be BCD, SWS and IGST. And when you are calculating IGST, you will be requiring price and percentage. Price you have to refer Customs Tariff Act, and percentage, maximum percentage can be the same 40%. Which means if that item is sold within India for say 28%, when the same item is imported, you will have customs duty. The breakup of that is BCD, SWS and IGST, and the IGST rate will be the same 28%. And who will be paying that customs duty? Customs duty which includes IGST will be paid by the importer. Whenever you talk about import of goods in India, right, you talk about customs duty. BCD plus SWS plus IGST. BCD plus SWS plus IGST. So import of goods in India. Product is only goods, process is import, place is into India. And for IGST, if at all you are talking about value for IGST, value for IGST will be by virtue of Customs Tariff Act. And when you talk about the rate, whatever is the rate which is applicable on the domestic goods for that item, the same rate will be there for IGST portion of customs duty when the same item is imported. I'll repeat it. If at all I am talking about selling of mobile phones within India, and the rate of that mobile phone, GST rate on that mobile phone is say 28%. When the same mobile phone is imported, point number 1, you will be having customs duty, BCD, SWS and IGST. Point number 2, for IGST valuation will be there as per Customs Tariff Act. Point number 3, for IGST the rate would be the same rate when it is sold in India, which means it is 28%. If the rate on mobile phone was say 5%, then if the same item is imported, you will pay customs duty which is BCD, SWS and IGST. And when you are calculating IGST, the rate would be, IGST rate would be 5%. That is a special point that I wanted to drag home when you talk about a special point in section 5 of IGST Act, which is not there in section 9 of CGST Act. Rather, to summarize, whether it is normal charging section or special charging section, we have categorized this into general charging section and special charging section. General charging section is section 9 of CGST Act read along with section 5 of IGST Act. where you talk about product being both goods or services, process, supply, place, interstate or intrastate, price being assessable value as per section 15, percentage if it is IGST maximum 40, CGST, SGST maximum 20, 20 respectively, and person being taxable person. So normal charging section is same for section 9 of CGST Act and section 5 of IGST Act. There is a special point in IGST Act which is not there in CGST Act. There is a special point in section 5 of IGST Act which cannot be there in section 9 of IGST Act, because we are talking about import of goods, and import of goods attracts customs duty, the breakup of which is BCD plus SWS plus IGST. That the product is only goods, the process is import, the place is India, import of goods in India. For price to calculate IGST within that customs duty, you have to refer customs tariff act, and the rate which will be there on the IGST element will be the same rate which is there when the same goods are sold within India, and the person who will be paying is the importer. And to make it more clear, general charging section, whether it is section 9 of CGST Act or section 5 of IGST Act, it will be, if at all it is section 9 of CGST Act, you will be having CGST plus SGST, and if at all it is section 5 of IGST Act, you will be having IGST. So that is a normal section. You are only discussing about IGST. Special charging section which is there only in IGST Act as a proviso to section 5(1) of IGST Act. There you talk about import of goods. Basically you are talking about customs duty, the breakup of which is BCD, SWS and IGST. And when you want to focus on IGST, then you have to focus specifically on IGST and find out the price as per customs tariff act, and the percentage will be the same percentage when the same item is sold within India. And all these customs duties, whether it is BCD, SWS, IGST, will be paid together at the same time by the same person, importer. That makes this section 9 of CGST Act and section 5 of IGST Act, both of which are charging section, very clear. We have discussed this very clearly with lot of examples so that you have these points in mind, and all those examples that we have written will be taken care in other aspects also. Otherwise we would have that examples within the chapter in written format itself. So all those examples that we have discussed will come again in written format in some other chapter. And one more important point, my friends, that we have discussed in the first topic itself, section 9(2) of CGST Act and section 5(2) of IGST Act tells that these 5 notified petroleum products, my friends, we have discussed clearly about those 5 notified petroleum products: petroleum crude, high speed diesel oil, you are talking about motor spirit commonly called as petrol, you are talking about natural gas, and you are talking about aviation turbine fuel otherwise called as white petrol. These, as of today, they are temporarily kept outside GST. As of today they have central excise duty plus state VAT, but these 5 items can be coming inside GST at any point of time once they are notified by the government on recommendation of GST Council. So that is discussed in this section 9(2) of CGST Act, read along with section 5(2) of IGST Act. So basic charging section we have discussed in section 9(1) of CGST Act, read along with section 5(1) of IGST Act. Now what is section 9(2) of CGST Act, read along with section 5(2) of IGST Act? It tells that these 5 notified petroleum products will come inside the ambit of GST. As of now, they are temporarily kept outside GST. As of now, they are having central excise duty plus state VAT. But at any point of time, they can come inside GST when they are notified by the government on recommendation of GST Council. So the same point that we have discussed in our earlier discussion in chapter number 1, GST in India, is again coming back here, and we are trying to again revise the same point that we have discussed earlier.